This ETF is amazing because it has increased its distributions by 86.2%. And not only it has increased, but also the share price has increased by 32%. And if you drip, you're up about 40% since it came out. And it hasn't been that long, it's just within 3 months. You see, gold right now is on tear, and a lot of people have that fear of missing out, that you're going to miss on a gold return. But the problem is that most gold ETFs and stocks don't have dividend or income attached to it. But this ETF I'm going to discuss today, actually, I'm going to talk about two ETFs that have greater return, no NAV erosion, and on top of that, you're going to be receiving weekly distribution. The two ETFs I'm going to talk about today will be GLDW. This is a Roundhill Gold Weekly Pay ETF. The price is $67.49 today. So if you look at where it started around $50, and now it has reached, if market opens tomorrow at this price, it will be almost $70. So you have gained about $20 per share with this ETF. Volume is 43,683, but on average, it has 20,000 share traded per day. The other ETF I want to show you is this one here, Roundhill Gold Miners Weekly Pay ETF. GDXW. It has been out for just 3 months, but has gained more than 25. Right now it's at 75, so it came out around 50, 51. It has higher volume than GLDW, about 48 to 50,000. This is more liquid than the other ETF. Now let's look at under the hood of these two ETFs. The first one I'm going to start with is GLDW Gold Weekly Pay ETF. GLDW, the Roundhill Gold Weekly Pay ETF, is designed for investors seeking a combination of income and growth potential. GLDW aims to provide weekly distributions and calendar weekly returns before fees and expenses equal to 1.2 times or 120% the calendar weekly total return of SPDR Gold Trust GLD, the gold ETF. GLDW is an actively managed, uses leverage to write cover calls on GLD. This is one of the popular gold ETF from Spider, and it has about 43% distribution on a weekly basis. Now, why should you invest in this ETF? You are investing in this ETF for three main reasons. Weekly distribution. GLDW pays distribution every week, offering a recurring income stream for shareholders. Remember, most of gold ETFs don't have that distribution. And the other reason you could consider investing in this ETF, it does have that enhanced exposure to gold. It uses 120% leverage. And the third is powerful combination. GLDW provide a potential powerful combination of leverage and weekly income. So these are the main three reasons you can consider investing in this ETF. It was incepted October 30th, 2025, and now it has 22 to 23 million asset under management. It does have expense ratio of 0.99. Management style is active. When it comes to holding, it only has one holding, and that's a SPDR Gold ETF. If we look at distributions history, it has been paying distributions for a while. The first time they paid about 16 cents. And as the time progresses, it keeps adding more income. There's one time here, January 9th, they paid 10 cents. So that was lower. But all in all, on average, it has increased from 17 cents to the last distribution they paid of 56 cents. This is very impressive. And this is a graph of how the distribution has been increasing. It started from 17 cents to 56. The only time they paid the lowest distribution was the first week of January. The second ETF I'm going to show you here is GDXW. This is a gold miners weekly pay. This ETF would have the same strategy and everything like that. It's going to use 120% leverage. There are two main differences between this ETF and the ETF I showed you earlier, GLDW. That one is a gold ETF following the spot gold prices. This one is a gold miners, so companies that mine gold and other minerals. It follows VanEck Gold Miners ETF, which is GDX, and it uses 8.2% leverage. But the distribution rate for this one is a little bit high. It's 74% based on the last distribution they paid. They would have the same main reasons why you should invest: weekly distribution, enhanced exposure to gold, and powerful combination of leverage plus weekly income. Was incepted on October 30th, 2025. It has accumulated a little bit more than the other ETF. This one has about 70 million. Expense ratio is pretty much the same, 0.699, and is actively managed. When it comes to holding, it does have VanEck Gold Miner ETF. And distribution history, this ETF also has increased its distributions a little bit, not as much as GLDW. As you can see here, the first time they pay was November 12th and was only 42 cents. And the last distribution, $1.08. Very impressive. If we look at the dividend growth chart, it started at 42 and it has increased its distribution. The only time they pay lowest was this time, but this last distribution of $1.08, this will pretty much cover that. So guys, I just made this video to give you a quick update on one of the best gold ETFs to invest. Unlike gold that you're going to invest and hoping gold will go up, this ETF will pay you weekly. Not only they will pay weekly, they also increase their dividends every time, which is very interesting. So if you find value in this video, smash the like button, and if you don't want to miss any of the updates, make sure you subscribe to this channel. Thank you very much for watching. I'll catch you next one. Bye bye.